Welcome back to Chip Stock Investor. We're talking about Micron today. We haven't had a video on Micron for quite a while, but we thought we would revisit it because they just had their earnings, and Micron's earnings can give us some insight into what the rest of the semiconductor world is going to be doing the second half of this year.
It looks like it's heating up, not just because it's summertime in the Northern Hemisphere.
Where does Micron fit into the semiconductor industry flow? It is an integrated device manufacturer, and memory IDM sales expected to have a banner year, $185 billion in 2025. And Micron is one of the big three in DRAM, specifically HVM for AI. The other two, Samsung and SK Hynix. Before we continue, just want to give a quick shout out to the sponsor of today's video, Fiscal.ai. You're going to see a lot of charts from them today that we made with the help of Fiscal.ai. Great resource for investors when you're trying to analyze a business.
And true to their start, they have added some great new AI features that help you get a quick, but also really deep and insightful analysis of what a business does and how they fit into the industry that they participate in. Great tools that we like to use every day when we're working, analyzing businesses and looking for places to invest.
You can get 15% off any paid plan with the link in our description or here on the video, fiscal.ai/CSI. That's 15% off any paid plan, fiscal.ai/CSI. And on a forward-looking basis, Micron looks pretty cheap, but let's take a look at how Micron did with the most recent earnings.
And do note, remember, like we talked about yesterday, those cheap-looking valuations, the two bottom highlights, forward PE of less than 15, even probably less than that now once Wall Street analysts update their targets, price to free cash flow elevated from that because of the CapEx. The cheapness implied in Micron is going to depend on how long this HBM-powered growth cycle lasts, right? It's relative and it's subjective because we don't know how long it will last. So let's see what we learned. Q3 fiscal 2025 revenue, $9.3 billion, up 15% quarter over quarter, up 37% year over year.
We'll address that reacceleration of AI, data center, accelerated computing, and the recovery of auto and industrial markets as well in our end market chart. And the memory cycle is basically synonymous with that top line there, accelerated computing and AI infrastructure. We've revamped this chart back in April, reaccelerating of growth in AI infrastructure, and maybe, or we're pretty convinced now, that auto and industrial is at the start of a new growth cycle. And if you were paying attention to our changes here, maybe you made some fantastic buys during the tariff panic, because things have certainly changed since then.
Speaking of this chart getting revamped in April, you may recall things were not looking so great at that time, but we revamped this anyways, and we explained why over on Semi Insider. And at the same time, we actually retooled our small bets portfolio at that time, bought a bunch of new stuff since then, and we're going to review all of those over on Semi Insider starting next week, first week of July. Check it out, Semiconductor Insider. You can find more, find the link in the description below or at chipstockinvestor.com. Hope to see you over there. Hopefully everybody, you've seen this already. We're not going to dwell on this very long, but $9.3 billion, again, revenue for Q3. The outlook for Q4 of fiscal 2025, which will end here in another 2 months, and we'll get a report on in 3 months' time, roughly, implies another 15% sequential growth rate and 38% year over year. So more indication that indeed we are going to see a re-acceleration of growth the back half of this year, fueled by that accelerated computing in the data center. Blackwell, Nvidia Blackwell, the B300 sales are rolling off the manufacturing line. And so those plus AMD's accelerators, Broadcom's custom accelerators, the XPUs, sales are on the rise, and they're all packed with HBM. So we'll just look at this slide again from fiscal. The big blue line is total revenue. The green and the yellow stacked on top of each other just to the right of total revenue is basically what you would call Micron data center revenue, with HBM in particular being a driving force for that end market growth. The HBM market in 2025 is going to approximately double to about $35 billion in total sales. Micron has said that it expects to have a similar market share in HBM as it does basic, let's call it basic plain vanilla DRAM. So that would imply Micron is going to exceed $7 billion in annual HBM sales this year. Not bad, considering this was basically not a product for Micron at all, just in the recent past. But let's dig in here a little bit more, because the overwhelming narrative, if you go out there right now, especially some of the retail coverage of HBM, a lot of AI generated content out there pumping the HBM market as a reason to go all in on Micron. But I think we need to be, I'm not going to say we need to be cautious. I don't want to take away from what Micron is doing right now, because it is exceptional, and this growth cycle could last longer than we expect it to. But let's do temper our expectations, right? That's healthy, right? I hope we're all in agreement. Unchecked optimism gets us in trouble. So let's check the optimism.
Well, one thing we could point out is that we're currently on HBM3E, and Micron remains completely sold out of its capacity for this year. So that's great news for Micron. But we have highlighted down there at the very bottom of this slide, HBM4 for 2026 delivered samples to multiple customers, and they expect to ramp volume production in calendar year 2026. And this might be taking a little bit longer for customer sampling and purchase commitments. So it's still too soon to make a call for calendar year 2026. But at least for the rest of calendar year 2025, which will be the first quarter or two of Micron's fiscal 2026, the growth cycle looks intact.
And we did get the question about, why didn't Micron stock hold on to its 5% gain after hours? I mean, really, seriously, if these things are just noise, it's low trading volume and after hours trade. And if it's just a single digit percentage move up or down, these things tend to be glossed over in the coming weeks when investors kind of digest the report and update their assumptions. Unless it's like a big double-digit move because management dropped some unexpected item on everybody, I think we can just ignore after-hours trade. But if you had to pin a reason to it, we would say this is probably it. Analysts might have been looking for more clear insight onto the ramp-up of HBM4 demand in calendar year 2026. No surprise here, it's too soon. Of course, Micron management is not going to provide an outlook that far out into the future when they're still sending samples for customers to work with and see how they'll fit it into their supply chain. And by customer sampling especially, I think we're talking about Nvidia, Broadcom, AMD, probably in that order. Kasey, tell us about automotive and industrial, the ugly part of the industry we've been waiting for so long to recover.
Yeah, it's certainly been dragging down the broader semi market. But for auto, Micron is seeing expansion and adoption of AI-enabled, quote-unquote, infotainment systems and increasing ADAS features.
Self-driving cars, is that what they mean? Or just displays, infotainment displays that don't suck?
Cool displays that don't suck. Exactly.
Okay.
Probably also some self-driving vehicles, as they said, level 2 and level 3 ADAS features. Ultimately, what that means is more complex storage needs for memory in those cars. And then highlighted regarding industrial, they're seeing a resumption in growth and low distributor channel inventory. So with that decrease in inventory levels, that's good news for Micron because that paves the way for more sales growth in the future.
Yeah, and that was the hang up for this industry for so long. End market sales just completely fell off of a cliff. It's more that they had way too much inventory of chips, of hardware, for too long. And when your inventory, let's say you're like a warehouse manager for an automotive company, and you just have too much part inventory, you might still be selling cars and you might be using up inventory. But if your inventory level is good for a year or two down the road, you're going to tell Micron, hey, we don't need as much memory chip supply this year. Just hold off. So the upstream effect on a company like Micron is more dramatic. And that's kind of been the driving force for this the last year, is waiting for those end market inventories to normalize. And that's exactly what has finally happened. And so I think this is why, like Kasey said, we updated that chart, end market sales chart, back in April in the midst of the tariff turmoil that ensued, that, even with the tariff craziness going on, inventories actually were getting kind of sparse again, finally. And that paves the way for that resumption of growth. So good news here. And that, of course, also drives the CapEx cycle, which we talked about yesterday as well. But here's the update.
Micron reiterated their 2025 outlook for around $14 billion in CapEx spend, which works out to about 30% CapEx to revenue. And then in regards to 2026, the CFO, when asked about this, he didn't really want to commit to those numbers for 2026, which is completely understandable because...
Yeah, way to go, Mark, deflecting that question.
Yeah. The translation for that is CapEx is going to remain elevated to support all of the U.S. expansion and that advanced packaging fab in Singapore. This is a look at performance relative to their CapEx and sales cycle. Both of those things generally reflected in the stock price. It's not a perfect correlation, but the stock price does tend to peak ahead of CapEx spend.
Kasey was gracious enough to offer everybody a price target on the live show for Micron stock. Just kidding. But we are going to say we think it's a pretty possible outcome that Micron stock does surge to a new all-time high the second half of this year based on the growth. But what the market is going to be looking for, as it typically does, as you can see from this chart, the market loves to sniff out a slowdown in the CapEx cycle and front run it. You can notice the blue line here, the stock chart tends to fall before CapEx peaks. And the reason for this is the memory IDMs tend to chase demand with their supply. The CapEx is a reflection of them increasing their memory manufacturing capacity. And so there's always this cycle where, demand for HBM, it's high, Micron can't keep up, SK Hynix can't keep up, Samsung can't keep up, and then suddenly, one quarter, they say, hey, we actually have enough supply. And then Micron, Samsung, SK Hynix have to figure out how to slow down that CapEx cycle to bring the supply demand back into balance. So that's kind of what the market is looking for here. So I mentioned there's a lot of untamed optimism out there right now about the HBM cycle completely changing the narrative for Micron. It is a new product. It's an exciting product. Obviously, accelerated computing is a huge secular growth trend, but let's just check the optimism specifically for Micron and the other two out of the big three, because they're a parts manufacturer. They're supplying an ingredient for the likes of Nvidia, and at some point, we don't know when, but they're going to have to deal with excess capacity for HBM, or at least a slowdown in demand for HBM, and that could have a trickle-down effect, an upmarket effect for Micron, and that will affect the stock. So before you look at it, and if we think about that slide, forward valuation for Micron looks super cheap. Yep, it might be. It may not matter. We have to be mindful of the cycle. Closing remarks on that. The good thing though, Kasey, CapEx headed higher, $14 billion this year, probably headed higher than that in 2026. Who does that benefit?
The entire semi-manufacturing supply chain.
Yeah, the whole thing.
But especially companies like the Fab Five, companies that supply the equipment for manufacturing semiconductors.
Yeah, and maybe you've noticed Lam Research has also rallied in recent weeks, along with Micron, in part because there's this expected uptick in CapEx in purchase of equipment to support HBM.